So today is Wednesday, April 6th, and I want to walk you through a trade that I took today using the US30 simple scalping strategy that I talked about in my last video. If you have not reviewed that video, you want to go there first and then come back to this video. So let's get right into it. This took place this morning after 9 o'clock, so I didn't take any trades prior to this. This is the only one that I've taken for the day. Otherwise, I'll probably be done, honestly, unless I take a trade for the afternoon session. But let's walk through this one here. So this is what I saw here. So I saw that we had been in a downtrend. We've actually been in a downtrend since yesterday. I did see that we pushed up during Asia and some parts of London, and then we started to come back down. So keeping with the overall trend of the market. So I saw this form right here, right? And then I saw the pullback, and then I saw this forming. This is the cinder block that I like, right at this EMA. This is the 200 EMA, and it's going to be more powerful than the 50, just so you know. So once I saw this forming at the 200, I really started to pay attention. And then let's zoom in here. I saw this flat top candle form after the consolidation. Now, once I saw this flat top form, I did not hesitate. I entered right at the open of the next candle. Now, with these Heikin-Ashi candles, even though it looks like the body closed right here, when the next candle opens, it usually opens a little higher, so it doesn't open right at the close of what the body looks like right here, because these candles use average price. Okay, so I got in right here, simply put my stop loss above the high, and my TP, as you know, is usually always going to be the previous low. Why? I said in my last video, because it doesn't always have to break. Okay, now I did get out a little early. I got out before market open, so we weren't quite at the low, and that's because I didn't want that 930 volatility to maybe push me out of profit that I was already in. So I was okay with taking, I think it's ended up being like a 1 to 3.3, and just being done at that point. Now if you come over here, you see that we did end up pushing much lower, right? But that's where your psychology is going to come in, okay? If your rules are to take profit at the previous highs and lows, take profit at the previous highs and lows. If you want to see if you can catch more of the move, you can always close partials and leave a runner. But I closed out the entire trade at that point and was satisfied with the profit that I gained. Now, if you look over here, I did not take this, but I did see this forming. And it pushed down. It did not push down to the low. But let me tell you that when I saw this candle right here, if this was a trade I was in, I would have closed it, or at least taken partials and gone break even, because that is a classic rejection candle. So that's just something to keep in mind also. And I didn't speak about this. So after we came above this high, we didn't hold above. So you can consider this push above the high as a fake out. Okay. Also, what do you see forming here? An M pattern. Okay. Also, if you trade this way, you can see, okay, you can see what that looks like. So if it doesn't hold above the previous high, you can consider that the push above was a fake out, especially if you get consolidation at a moving average. I hope this is helpful. You can connect with me. I'll leave a link below to the trading community that I'm a part of. You can message me directly on there if you have questions, or if you want to set up a one-on-one, or if you need help, further help executing these trades. All right, have a good one, guys. Be blessed.